Welcome back to another video. And in this video, I'm going to be talking about how I trade options for income and my scalp trading strategy. And I'm going to be talking about a lot of different things. My main watch list, how I go about even trying to find some breakout charts, why I trade weeklies, the strikes, the setups, and how I go about listening to real-time live news. So just to start out with why I even trade options. I've been trading for 4 years, just like everybody else. I had my struggles in the beginning. The first 2.5 years were very tough. I had a lot of ups, a lot of downs. I was really just kind of breaking even the entire time. And after 2.5 years of giving it everything that I had, I was very stressed out. So what I did is I actually backed off. I realized that I needed to take a mental break. So I took a 6-month break, got away from the market entirely, worked on other things, and then I came back when I felt like I was ready again. And I funded an account with Interactive Brokers last July, so 2019, and I started with $3,000. And because I was below the $25,000 PDT rule, I opened a cash account. And when it comes to options, you can trade as much as you want with the cash that you have because the cash settles overnight. And that gave me the freedom to trade every single day instead of being confined to the PDT rules. And even though I now have a PDT account, I got so used to trading options and found consistency that I just stuck with it. I do trade stock when the option spreads are pretty bad, but majority of the time I'm trading options because that's what I'm comfortable with. So those are the reasons why I scalp options. Now to talk about charting and my broker. What you see on my screen right now is Thinkorswim. I only use Thinkorswim for charting and some of the features it has. My broker is Interactive Brokers. That's where I execute the trades. So I'm watching the stocks I'm interested in trading on Thinkorswim, and then I have my Interactive Brokers all set up, ready to execute the trades, and I have it set up in a very specific way. I will add the video on the layout above. So that is all the software I use when trading. I don't use any real-time scanners. I trade the same basket of names every single day around technical levels. Always starting with the daily chart, usually jotting out prior day's high, prior day's low, depending if the stock is strong or weak, and then using a 5-minute to be able to put pre-market high, pre-market low. I don't go too crazy into the technicals because if I put too much on the chart, I will overthink it. So really just focusing on only a handful of levels and then waiting for patterns to develop around them. I really like opening range breaks and flag patterns. And now to talk about my watch list. These are the names that I'm looking at every single day. And even within this group, I obviously have my favorites. I trade Tesla a lot. Some of my other favorites are ones that I trade a little bit more often. Amazon, Facebook, Roku, BA, Square. So even within this list, I have about 5 or 10 that I'm trading every single day. And then what I'm doing is waiting for price action to get tight on the daily. Maybe it breaks out of a long period of consolidation, or one of these is trading near all-time highs, and then I will be looking to trade it that day and then rinse and repeat. I also really like to trade breakouts. So the way that I go about trying to find a breakout chart is in the watch list of Thinkorswim. So on the top right of this watch list, I click on Detach Gadget. Click on this to get the drop down, go into the NASDAQ 100, and then I just sort by price. And then I quickly go through this list to try to find a good looking daily chart, and then I put it on my watch list for a possible breakout, and I make sure to do this every day after the close. Not only do I go through the NASDAQ 100, but going to this drop down again, I also go into the S&P 500, sort by price, and then just quickly go through the daily charts to try to make a little bit of a breakout list. And sometimes I can have like 10, 15 names on the list. Other times I may only have 3. It really just depends on what the market is doing and how their daily charts are setting up. So that's my everyday watch list and how I go about occasionally adding new stocks to that list. And now when it comes to news, I keep it very simple. I just use the news tab that Thinkorswim offers for free, reading the headlines of what's going on with that current stock. And now something that I really like to use every single day is Benzinga Charlie. It's a squawk. This guy talks out real-time news out loud, and you can access it on this top right. Click on chat rooms, click on Benzinga Squawk, and then click on listen. And this is how I just get a feel for what's going on in the current market. If the president tweets something or there's some vaccine news or anything like that that's market related, I'll hear it through my speakers, and it just makes me feel like I'm connected to what's going on. I don't really make trade decisions off of it, but it's always good to know just in case if there is some crazy headline and there could possibly be some volatility, I'm prepared. So now let's get into some trade examples. I'll do a top-down approach, just breaking down some of the basic technical levels that I'm looking at, And then I'll go into the details of showing the technical patterns, how I choose the strike price, and all of that. So I'll start with Goldman Sachs, had a very nice move off the lows, nice period of consolidation, looks like a bull flag, close to the 9 EMA, takes out that 245.93 pivot, looks like it has room higher. So the main technical levels that I like, obviously that prior pivot high, 245.93, had a big move in the after hours, 257, and pre-market high, which was 254. Nike had gapped to an all-time high, very strong stock, nice period of consolidation, close to the 9 EMA. It cleared the all-time high, 141.14, and it was trading higher in the pre-market. So the main level that I would be watching was pre-market high, 146.65. SQ, a very strong stock, nice uptrend, getting a little bit extended, but had a very quick period of consolidation. All-time high, 237.09. So that was the main level that I would be watching. And then also looking at pre-market high, 240.20. Those are the technicals on the 3 examples that I'm going to be using today. So now let's get into the setups. My main focus is the open because that's where the biggest moves can happen. So I'm usually done within the first hour. And some of my favorite patterns off the open are opening range breaks and flag patterns. Goldman Sachs had a very nice opening range break. So I'm just going to go over how I would have traded it. Whenever I'm trading an opening range break, I'm a big fan of the first move to be down. So at least it gives me a clear high of day, and that will be my trigger. So just looking at the chart, 1, 2, 3, 4 minutes, very nice tight period of consolidation. And the high of day was 250.39. So when it breaks 250.39, it should have some continuation. Nothing is 100%, but just playing the probability. And when it eventually breaks, has a very nice move. Also knowing that the technical level pre-market high is above. And that is all that I'm focusing on. I am scalping. So I'm in trades typically anywhere from 1 to about 4 minutes. I don't really care how long I'm holding a position for. It's about the size of the move. And when I can get 1, 2, maybe even 3 points really fast, I will take that every single time. And this is how I would have tried to trade it. Sometimes the patterns can set up around weird levels or in between the strike prices. I always try to trade at the money or the next strike out of the money. But sometimes if that out of the money is a little far away, I don't mind trading slightly in the money. Goldman Sachs is a great example because the high of day was 250.39. And as you see right here, the options chain, the next strike out of the money was 250.50. To me, that seems a little far away. So what I would have done is traded the 250s. And this is how I go about stop losses. It's very different than anybody teaches. I am a big fan of go quick or get out. And I'll usually give it kind of the whole number below or maybe a prior candle low. So had I gone long, 250.39, the high day trigger where I think that there should be more momentum. If it starts to go in my favor very quick, I am now looking at the option contracts and I want to do my best to not let those go red. If it popped above that and then started to roll over and got under 250, even this prior candle low, 249.93, I'll just cut the trade and get out of it. So I don't focus on a risk reward ratio, risking 50 to get $1, risking $1 to get 2 like a lot of people do. I focus on high probability setups that I have tracked and I know work really well. And I want them to go very quick or I just get out of the trade. And I'm definitely not perfect. Every now and then, sometimes some things pull back pretty fast and I'll have to get out and take a decent sized loss. But because of the go quick or get out on high probability setups, I have a really high win rate and that allows me to be very consistent. And even when I occasionally take a whack, I can get it back pretty quick. And Goldman Sachs even had another nice setup, consolidated right near pre-market highs, put in a nice flag pattern above VWAP, above the 9 EMA. I don't want to continue to chase something when it's gone too far, but I'll usually always give the first very nice flag pattern a chance. And that's a nice flag pattern. And that high is 254.60, 254.60, so hit it twice. So that's going to be my trigger to go long. I always want to anticipate just a little bit. I don't try to overly anticipate, but I want to get in just before the break. So that would be the area that I'd be looking at. Try to get in just before the break. And this is going to be a good example. I would be trading the 255 calls. So the strike that's just out of the money, but not too far away. So that way, if it starts to go in my favor pretty quickly, it's close enough where the option premium should move just fine. And as it broke that flag, it had some very nice follow through, and I'm a scalper. So the moment I get that quick move, I take profits every single time. Now let's get into Nike. So the first move was down, which I prefer because now it can give a clear high of day that I want to consider going long. So nice 1 minute pullback off the open, a little bit of a consolidation on the next candle. High of day is 144.82, and this goes pretty quick. So this is like a 3 minute opening range break. Sometimes those opening range breaks can happen quick. I prefer if they're 5 to 10 minutes, but sometimes they happen quick and I'm still willing to give them a chance. So what I would have done is as this got to high a day, 144.82, try to anticipate that break just a little bit. And this actually lines up perfect. So this is a great example, trading the 145 calls. And as it starts to speed up, the moment that I get that quick move, already starting to take profits. And then Nike sets up again. So very strong move, showing that buyers are clearly in control, just made a new all-time high, consolidates above VWAP, above the 9 EMA, and just below pre-market high at 146.65, and has the new high a day at 146.52. So always trying to anticipate that high a day break just a little bit and have the technical level above. So I would have focused on the first strike just out of the money, trading the 147 calls, try to get in just before the break. And then once it starts to speed up, very nice move through 147, get a little bit of follow through. And because I'm a scalper, I just take those quick profits. My focus is to always try to take the clean opening range breaks off the open. And then the first flag pattern, if there is one, after that, if it just continues to go higher, I am not chasing. I just leave it alone. I don't want to get caught in some sort of aggressive stuff move, so I'm usually done within the first hour. Okay, and the last example, Square. And this is going to be a good example because there was no real opening range break off the open, but there was a nice flag pattern. So it went straight up through a new all-time high. The last thing that I want to do is chase this. So I'm waiting for some sort of pullback, and then I want to see, does that pullback hold up? And it does. So pulls back right to VWAP above the 9 EMA, nice bullish candle off those indicators, and then has a very nice flag pattern. So the high of day is 239.94. So that's going to be the area that if it breaks, it should have some follow through. I'm always trying to anticipate just a little bit. So what I would be doing is trading the 240 calls. So right at the money. And as this comes up, trying to get long just before the break, also knowing that there is the technical level above pre-market high, 240.20, breaks the high of that flag pattern and has a very nice quick move higher, which is all I'm looking for. So the moment I get that quick move, I just take those profits. And being that I would have traded the 240 calls right at the money on this pop, the option premium would have moved nicely. So between Goldman Sachs, Nike, and Square, those were 3 great examples of how I go about trading options for income and my scalp trading strategy. It's definitely not for everybody, but the key to all of it is to just be very fast. The moment that it starts moving in my favor, I'm already thinking about taking profits. And if it starts to take out like a prior candle low, I just cut the trade really fast. And I always trade same week expiration because I'm in and out of these trades so fast that the time decay does not mess with the option price. I'm just using them as a means to take the trade and get the quick move. And that's it. Let me know if you have any questions in the comments below. Feel free to like and subscribe, and I'll see you later.